Welcome to The Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. If you've never acquired physical gold and silver, now is the time. Because if we look at just in 2025, silver started the year at $28.84 US. We're currently trading just shy of $30.50. It's a pretty good move over the last 3 weeks. Gold has also started the year off at $26.24, and we're already up to $27.59. This goes back to something we were talking about for a little while moving into the new year, which was there seemed to be a concerted effort to keep the prices as low as they possibly could before 2025, and look at that, we're already exploding higher. My name is Jeremy Wiseman, the number 18778 Silver, and the website guildhallwealth.com. If you're looking to hold physical gold and silver in your registered account, we are having an investing seminar on Saturday, February 1st. All you have to do is go to the website guildhallwealth.com and grab yourself a seat, although it is getting more and more difficult. Nick is going to be joining me in the show, and today, being that it is a new year, I'd like to focus a little bit on the fundamentals for why people should own physical gold and physical silver. There is still a large chase to run into things that are not necessarily on the table of elements, if you will. But gold and silver are key for portfolios because of the one thing is that they are actual assets. They have no liability, and therefore it is an insurance policy against runaway inflation, central banks that have no ability to stop themselves from printing more money, going into more debt, and we need discipline, and gold provides that discipline. You've probably heard us talk on this show about the pyramid, which was created by John Exter, who was a central banker, and effectively it illustrates, and you can look this up, John Exter, go online, and it demonstrates what J.P. Morgan said, which is gold is money and all else is credit, because everything is going to be based off gold, which is a measuring tool. It's a value. It's not a price. And this is why gold has performed so well against all currencies, every single currency around the world. There is not a currency around the world that has performed better against gold than gold has against those currencies. And the reason is because these fiat currencies are created out of thin air, invented like alchemy, and then forced on you to use to pay your taxes, which, by the way, you pay 35 plus tax, maybe 40, maybe even higher than that, and then you pay 13% for everything you purchase after you've paid your income taxes. And then the government decides to say inflation, oh, it's at 2-3%, and you're supposed to accept a 2% loss on your purchasing power every year, which is 20% every decade, 40% every 2 decades, 60% on a 30-year basis. That's a mortgage. Okay, that they want to take from you, and this was done on purpose, and this is something that everybody chasing yield and GICs in the stock market, most people don't understand. Now today, people understand what inflation is because you go to the grocery store and groceries are up, and maybe it is the carbon tax, as if that has any difference compared to what China's doing when they're building coal plants. But nonetheless, Canadians see it every day now, whether they're buying a new car or getting their groceries or their insurance has gone up or everything else has gone up, their rent is going up, etc. And somehow we're all just supposed to accept that. Well, you don't have to accept it. You can get a rebate on that by simply holding an asset that continues to grow in value against these currencies. Now, gold's up over 600% in the last 20 years. Silver's up over 400%. And the question is where can they go from here? And they can go up much, much higher from here, because I kind of look at it like the mandates. It's very quick to make a mandate, and then it takes years for the law to catch up and say, you know what, that was actually illegal what you just did. You don't have the legal authority to make that mandate, but it's too late. The mandate was created people were, victimized by it, and today we're victimized by the debt. Today we're victimized by the taxation. Well, if you look at where gold is going, gold started in 2000 under $300 an ounce. England had sold off half of its gold by Gordon Brown, who then became prime minister, and I believe, I'd have to double check, but I believe Mark Carney also sold off a lot of Canada's gold. And I believe he sold it to England, sold it back to them. We better start digging in Canada because we need gold in our reserves. Why is it that all these central banks around the world are buying gold? Well, it's easy. For one, the US dollar was weaponized against Russia. And if they can weaponize it against Russia, they can weaponize it against any other country that they may decide. Okay, maybe there's a new administration that will be more friendly and won't want to weaponize. Does that solve everything? No, because the damage is already done. These countries have to protect themselves against currencies, against political unrest, and they want their own sovereignty. And gold provides that. I'll give you an example. During the war, Winston Churchill took all of England's gold and shipped it to Nova Scotia. Why? Because if Hitler succeeded, they could take the government over there and still have all the money. That's sovereignty. And that's what gold does. It's borderless in that respect. And so these countries want to maintain their sovereignty. They want to make sure that there's no counterparty risk. And so, yes, maybe there's a sense of de-dollarization in that act. The other part of it is that gold provides liquidity. You're not held up for your money in any sort of way. Another country, being a tier 1 asset, any other country in the world could accept that as payment if the dollar isn't available, if the system isn't available, they'll certainly accept that tier 1 asset of physical gold. But there's I wouldn't say nefarious, I'd say there's also an underwritten reason why central banks are accumulating gold. And that is that there's an understanding that gold has to be revalued. There's one way that you're going to pay off the debt, and that is to make the debt less important against the value of your assets. So who cares if you're in $36 trillion in debt if your gold goes up significantly and all of a sudden that debt is dwarfed by the value of the gold? That can certainly happen. Now, you can cut expenses, you can stop printing money, you can lower interest rates, but at the end of the day, you need to pay off that debt with something. And you're either going to pay it off with currency that's worth even less than it is today, and I would venture a guess that you're running out of room there, because if it's all based on faith and credit, then that's a tenuous circumstance, and people would tend to leave very quickly at a certain point if they're not already doing that. So these central banks understand that the gold price has to be revalued. And if we look at the last several years in gold and then in silver, which I think is going to be even more exciting, we'll talk about that in the next segment, is that gold, even if you looked at a 10, 15, 20% gain every year for the next several years, you will find that gold will be trading north of $5,000 an ounce, maybe even possibly $7,000 or higher in the next several years. That is money you can take to the bank. The number, 1-877-8-SILVER, the website, guildhallwealth.com. So if someone's looking for, is this the right time to get involved in the market? Should I wait for a dip? What I would say is think about where the price is going to go in the next 5 years. Is it going to be at 5,000? Is it going to be at 7,000? Is there potential for 10,000 or more? And I know that might sound like la-la talk, but even from a conservative perspective, if you were at $4,000 or $5,000 an ounce, I think you have to ask yourself, if you own gold and it's trading at $5,000 an ounce, are you going to be upset whether you bought it at 27, 28, or 26.54 and 35 cents? The answer is you're not going to care, because at that point you've already made the money. We strongly urge anyone who's looking to get involved in the market to crawl, walk, run. You don't have to add new anxieties into the market. Just learn how it works. Dip a toe in the water, pick up a few ounces of gold, pick up a tube of silver maples, try it on for size, see how it looks and feels. And the reason we do that is because we're so confident that once you own that physical product, and I'm not talking ETFs, certificates, gold-backed funds, anything that's a derivative of the actual thing. I'm confident that once you have that physical product in your hand, you'll have an aha moment that will change your life and how you approach money forever. Give us a call. The number 1-877-8-SILVER, the website guildhallwealth.com, or sign up for our investing seminar and holding physical gold and physical silver in your registered account. Remember, if you can't hold it, you don't own it. So if you're going to have an insurance policy, you want to make sure it pays out. If I have car insurance, I don't go out and buy an investment in an insurance company. I actually have to get the actual physical insurance. And so you want to know that that insurance policy is there for you. And that's what gold and silver do. There's a lot more to come here on The Real Money Show. The number 1-877-8-SILVER, the website guildhallwealth.com. Nick has joined me. And again, remember, if you want to learn about holding physical gold and silver in a registered account that's physical, allocated, segregated, you even have the ability to go and personally audit your holdings. But to learn about how it actually works, the nitty-gritty, what's inside, how it all will go down, you can go to the website guildhallwealth.com and sign up, although we have had a lot of interest in it this week. I'm not sure how much more we'll be able to keep spots available, so definitely go to the site right now, guildhallwealth.com, and make sure you secure your seat. And we're going to be having that event at the Novotel in Vaughan, Toronto. Now, before we bring Nick in, I want to discuss, how does silver get to $50? And does $50 even matter anymore in this market? You know, it's had a great run. We've seen silver start off in 2000, 2001. I think it was south of $4 an ounce. We did see a high of $48 an ounce, and it didn't quite reach its nominal high of $50, which it reached in 1980, which is crazy on its face. Just think about that. What is trading at a discount to its 1980 price? And when you think about silver, you say, okay, even if there was 2 billion ounces of silver above ground, which I don't believe, silver is used in more technology today than ever before. Who had a microwave in 1980? Who had an iPhone in 1980, or a home computer, or an electric car? Was China involved in that run up to $50 an ounce? I don't think so. Was Russia involved in that run up to $50 an ounce? I don't think so. What about South America? No. No developing country at that time was involved in that run to $50 an ounce. And yet, there it was. And even back then, you didn't have the supply chain setup that you have now. Back then, Tiffany's actually had a stockpile of silver. Toyota probably had a stockpile of silver. Zenith TVs, if anyone can remember that in 1980, I'm not that old. But they probably had a stockpile of silver. No one holds a stockpile of silver these days. However, you do have a race for these commodities. For example, for those listeners of The Real Money Show, you know very well, we brought to you the information about China pulling out 40 tons of silver out of Peru. They put a $1.5 billion into a deep sea port, and they just yanked the silver right out of that country. So we know that all of the use cases for silver, not including the military, not including potential investment demand. I mean, just imagine gold goes to $5,000 an ounce and silver's trading at 100. Well, which precious metal would you put your money into? Anybody is going to make an economic decision and say, yes, that makes perfect, valuable sense. And they will run to silver. And of course, people don't like to buy low. They do like to buy high because seeing is believing. And so as silver gets to $50, people will finally believe that it can go to 50. And at that point, I often use the analogy of a sailing regatta. At that point, you move past the starting line. So how do we get to $50? Well, I think right now there's still a challenge of market psychology and moving through the 30s. Last year, we started out around $22 an ounce, and by March, we were off to the races, and we ended the year. We got to as high as over $34 an ounce, but then we did get a pullback to just below 30. Way to paint the charts, powers that be. Nonetheless, last year we were trading at 22. Now we're up above 30. And it was a grind. And this year will probably be a grind as well. And there's lots of analysts who think that we can get to $40. Maybe not end the year above $40, but certainly $40 is in the cards. So I think that we do grind higher, which makes it a great opportunity for anyone who wants to get involved. You still have some time. But I think that once we break 40, the market psychology turns to an inevitability that we break 50. And 50 is important because once you break 50, I believe you move into true price discovery. Right now, the market's sort of held down under these expectations, under certain psychology that people believe that's what the price should be, because that's the price they see on the screen every day. But once you break $50, you're into a whole new game, and you no longer can control the price. It's going to be what price should it be? And of course, there's the gold to silver ratio. As gold moves higher, it will yank silver higher with it. It'll tug of war, pull silver higher and higher. That ratio right now is in the high 80s. In 2011, we got down to 35. Obviously, 1980, we got to the historic norm. I wouldn't bet my financial future on it, but it's certainly a criteria I'm going to keep my eye on. And I know that I think Bank of America, if I'm not mistaken, said they believe it could go down to 70. And Vince Lancy talked about slippage because you're not going to land on a dime at 70-to-1 ratio, which means you're probably going lower. So I think at some point, if you follow Mike Maloney, if you follow any major analyst in the market, they talk about, and we've seen it, that as the gold bull moves more and more into fruition, silver will start to take over because it's a smaller market. That means that you're putting the same amount of into the silver market that you're putting into the gold market. And because silver is such a smaller market, think about trying to push a car, right? Silver is like trying to push a real car, and silver is like trying to push a toy car. It's going to go really, really fast with that power behind it. And so you're going to see big, big moves. And of course, if silver were to go to a 35 or 16-to-1 against $5,000 gold, you're looking at silver moving into the multiple triple digit. So as Canadians, when we look at what we've been putting up with for a long time, taxation, inflation, and just, you look at countries like Saudi Arabia, well, we're second, third behind them in terms of oil production. Why are we paying taxes? They're not paying taxes. If you go back and look in 1970, we were one of the two richest countries in the world. There's no reason that we should be paying taxes. There's no reason that we shouldn't all have tons of money in our pockets. But of course, we've been under economic warfare. And if you look at, well, how do I make it back? Look at silver. Look for something that's truly undervalued and something that you can, when we say research, I don't mean just blatantly, do your research, meaning listen to what other people have to say. I mean, you can really do the research on silver on your own and discover just how undervalued it is. And I think you'll be excited to have some physical precious metals in your portfolio. The number, 18778 silver. The website, guildhallwealth.com. Nick, welcome to the show, buddy.
It's good to be here.
So let's talk about moving through the crawl, walk, run, right? You've seen people pick up a small amount and then move into larger amounts. Why do you see that strategy as something that works so well for people?
Well, I mean, comfort breeds confidence, right? You start small, start with that ounce, start with the gram of gold, whatever it might be. I'm working with a client right now who did that exact last week. She started with $1,000. She bought a 10-ounce bar, 2 10-ounce bars, right? Calls back this week. What about gold? What do I do with gold? How do I get exposure, right? So that comfort by doing that first order, that first small order, leads into building your portfolio, getting exposure into the markets that you want to, and talking to us, the experts, and going from there.
Yeah, I think part of the confidence as well is just kind of understanding pricing, right? And I think you also need the paradigm shift of what's the price to how much do I have, right? That's the big difference, I think, between someone who's never been in the market and someone who's in the market, right? Someone who's in the market are all about how many ounces do I have? Because they're doing the calculations. How many ounces do I have if it goes to this price or that price? And it's not so much the price. I know we're talking about that a little bit, but it's about what it's valued at, what it will buy you, right? Should a house or an apartment in Toronto cost you 600 ounces of gold? Or should it cost you 150? And if you had 600 ounces of gold, would you want to spend all 600 on a property? Or would you rather spend 150 on a property? So I think once you own it, it's really about the ounces versus the price. And I think that new buyers have to go through that discovery for themselves. At what point do you think it makes sense for people to consider maybe not self-storing their product, but looking at something like vault storage, where it's secured physically and allocated?
Yeah, I mean, hands down, I think the best way to own precious metals, hold it, is within a TFSA, right? You get the tax benefit. You don't have to pay any capital gains or income tax, whatever it might be, on any growth. And, as we've seen over the last 20 years, gold, silver up over 400+%. I mean, imagine not having to pay taxes on that. That's great, right? And so self-storage is good for a small amount. I mean, I came from the vault. I started my career at the vault. Having it insured, secured, armed guards, everything like that. I mean, you can't beat it. And, for a small rate, I feel like that's a risk that I'm willing to pay for, right?
And just for the record, associates at Brinks are allowed to have guns.
Correct.
So, one of the few Canadians who are allowed to carry guns. When you think about the gold and silver market, what about the vault facility is something that you think most people would never, they just can't understand because they've never been there?
Yeah, I mean, first off, we do offer the ability to go and view your product, right? So if you do want to go and experience that vault-like procedures and what it's like, definitely give us a call. We can schedule that. It is private, so you can't just go knocking on the door and tell them to let you in. But, having that private, entity is almost more reassuring, knowing that nobody else can just walk in and take your gold. Doesn't apply to bank closures, or the government can't go in rolling in with tanks and take your gold, right?
Because it's private.
Because it's private.
Right. Let's stay on this topic as we go to break here. The number 1-877-8-SILVER, the website guildhallwealth.com. How does vaulting work? When is it right for you? What kind of costs are we looking at? What are the benefits? Let's stay on that topic over the next segment. Again, the number 1-877-8-SILVER, the website, guildhallwealth.com. Gold and silver are so easy. And I think that may be part of the reason why more people don't get involved, because they want to trade and they want to be active. And, Nick, I was looking at our book of clients who started with Questrade back in 2016. They're all up over 100%, doing great in their market, in the market. And you can see some clients who maybe decided to go in a different direction. They've got all these different stocks. Some are up, some are down. It's such a wide variety, so much work. And then you sit there and you look at gold. You said you didn't have to do anything. You just had to sit there and hold it and own it. And it can do great things for you. And of course, we do believe the market can move much, much higher, and we're going to continue to talk about the fundamental reasons driving the market higher. If you want to learn about holding physical gold in a TFSA, you can join us at the seminar on February 1st. Go to the website, guildhallwealth.com, and sign up. It is getting tight. It is getting tight. So this might be the last week we run commercials on the radio show. Nick, Donald Trump is speaking at the World Economic Forum, and he was talking just recently, this is just coming across our feeds, that he will demand interest rates come down, which is interesting because we've talked about this. Printing money is not going to look very good. They probably will do some spending, but the better way to go would be to drop interest rates and create velocity of money. Of course, dropping interest rates means your GICs aren't going to be giving you a lot of return, and it does push incentive towards the precious metals, because all of a sudden the cost of carrying it is seems insignificant because the interest rates you're not getting any money, not getting anything for your money in the bank. This brings us back to depository storage. The cost can be pretty insignificant, I think. Why do you think it is that some people shun holding physical metal in a storage account, and why are they so wary of some of the costs of doing business? What are the costs, and why are those costs something people maybe like or don't like?
Yeah, I mean, the cost involved with physical storage is you're dealing with heavy metals. I mean, I don't know if any of you have held a 100-ounce bar, but they're about 7 pounds each, right? And so at the vault, we have a team over there that works directly with us and our clients. They physically lift up every single bar, record every single serial number, move it into your own allocated, segregated account that you own. You don't share anything with anybody else, right? And so there's people, they are doing that for you, for us. And the insurance alone, to have everything insured and secure, it's not cheap, but for what we're offering, that's a small cost. I mean, I was talking with somebody the other day who bought about 26 ounces of gold, and they have it at a safety deposit box in a bank. It's like, that's great. It's not at home, so it can't be taken from your home. That's good. And then I asked her, is it insured? Well, I don't know. Well, what do you mean you don't know? Right? She didn't know if it was insured or not. And it's like, okay, well, you're paying for something, a safety deposit box. I don't know how much it is, $70, $60 a year. I don't really know. Right? But if it's not insured, then what do you get if something happens?
Or, look, in COVID, they shut the banks down.
Yeah, you can get it.
It's absolutely happened. There's a precedent that it's happened, and we are in unprecedented times. You don't know. There's a certain amount that says, okay, I can spread it around, right? If I'm only ever going to own 20 ounces of gold, maybe storage isn't right for me. Maybe I'm happy to have it in a safety deposit box. When I first started, I was okay with that. I don't have anything in safety deposit boxes now, but at the time I was okay with it. I thought, hey, you know what? I want to have 15, 20 ounces of gold and hope I never have to touch it. And I kind of knew in my mind that if I did have to touch it, I have to get in my car, I have to plan, get in my car, go there, get the safety deposit box, take out the gold, go back in my car, take it to where I need to sell it, right? There's a lot of opportunity there to say, is this what I really want to do? And I always kind of figured for myself at the time, going back to 2006, and it was like $580 an ounce. But I thought, if I have to sell this, it's either because I'm really desperate or there's a crazy opportunity that I can't pass up. Luckily, I haven't had to sell any. And obviously that amount has grown, thankfully as well. But I think the storage starts to become important once you move past, a small amount that you're okay with having uninsured, perhaps. Insurance, if anything over $3,000, it's like cash. So anything over $3,000 is not insured, even in your home. So I think once you get to that level, you have to consider it. And one of the things that I always find interesting for people who have it stored is the ease of liquidity. Pick up the phone, you're at the baseball game, right? You decide, hey, I want to sell. You're on, you're traveling. You've decided, hey, here's the perfect home in Mexico. I want to buy. I need some money. Well, the product is there, ready to sell, ready to have the cash deployed to where you need it, and you don't have all those logistics.
And you don't have to risk, transporting it.
Which is where the insurance comes in play.
Exactly.
Yeah, absolutely. And this applies as well to registered accounts. Why do you think people should consider the physical in a registered account as opposed to, going a route that doesn't have any costs like ETFs or gold-backed funds, pool accounts?
Well, because with physical metals, it can't go to zero. Right, there's no counterparty risk. Even though it's in your registered account at the vault, there's still no counterparty risk. Right, so having physical metals, at the end of the day, you can hold it in your hands. You can take delivery of it. There's the growth that has been happening over the last 5, 10, 20 years. Right, that beats any GIC, it beats inflation. Right, and those numbers don't lie.
Yeah, I think that it's all about taking that first step. Right, you need to have some that you own and see the prices rise above your cost to get involved. There is a barrier to entry because it's an asset, because it's actually something that's been fabricated, it's been sourced, fabricated, wholesaled, retailed. Why bother, right? You think, well, why bother? Well, because you can't really invest in coffee. You can't invest in lumber. It's very difficult to invest in a barrel of oil. But this is a commodity that you can invest in, that you can own, you can take delivery of. And having that asset, knowing that there is a finite amount. And there is an advantage to having something that has an expandable supply. Even at 1.75% a year to the stockpile is very important because it can stop hoarding. You know, if you had an asset or money that was finite, everyone's going to hoard it. And then you'd end up in massive deflation, which can be a bad thing, right? Where, you know, you're trying to pay expenses, but the prices are dropping and you have to keep dropping your prices and it goes below what you can afford to produce it at. So deflation can be a bad thing. Absolutely. And gold prevents that because its supply is expandable. Even if it's only at 1.75, that's more than enough. The number, 1-877-8-SILVER, the website, guildhallwealth.com. You know, at the top of the show, we discussed that if you look at the numbers, take a calculator, add 10, 15, 20% a year to the current price of gold, and I believe you'll see over the next 5 years, you're going to see gold easily move into the 5,000 range. Could go much, much higher than that. Central banks, on the whole, look to continue to accumulate physical gold and silver. Trump just said at the World Economic Forum that he's going to be pushing for lower interest rates. This is always positive for physical gold, physical silver. And I don't think we've had the public get involved in this market to a great extent. But I do believe that they are going to get involved in this market, and you can see the type of gains that have been had already. And I truly believe when you look at the fundamental outlook for silver with its use cases in technology, in military, you have Russia who said they're gonna buy it for strategic purposes as part of reserves. This is huge. That means it's not just gold being purchased in reserve, but also now silver, because there's an understanding that it is money. Now, of course, the powers that be probably don't want to see this market go crazy because these industries use the physical product. And it's price inelastic. If you need a kilobar of silver in a new battery for a car, whether the price is $30 an ounce or $100 an ounce probably won't change the price of the battery a whole lot, but you need to still put that kilobar into that battery. And so it's price inelastic. So if you're buying physical, you're pulling it out of circulation that could eventually be melted down for industry or whatnot. You're helping your case. If you're buying paper, certificates, any IOUs, ETFs, they don't have to really have the physical. You can look at their prospectus and see that. There's lots of different paper versions or derivatives of the physical gold and silver market that aim to make things easier for you. Look, holding physical gold and silver is the easiest thing you can do. You hold physical products in your hand every single day. You go somewhere and you buy something, right? Or you take your lunch to work in something that was purchased somewhere. Everybody has items that they've purchased at retail in their lives. Most people have to get storage to store all that stuff because they're so attached to it. Everybody owns retail stuff, and that's what physical gold and silver is. It's just retail stuff. The only difference is most of the retail stuff that you have is going to lose tremendous amount of value. You're going to sell it on Kijiji or Facebook Marketplace for 10 cents on the dollar, 20 cents on the dollar. Gold and silver is not that. It's the opposite. And as we move into the golden era of, as they say in the United States, entering the golden era, physical gold and silver are going to be more and more important as central banks have continued to buy it. They are telling you they are putting an importance on this asset, on this item that's on the table of elements. They're not putting their faith in a cryptocurrency per se. They're not putting their faith in other sorts of investments. No, they're saying tier one asset, we want to own gold. Well, you don't have to be the smartest person in the room to just say, I'll just follow the smart money. And if they're buying gold, then I should be buying gold and I should be my own central bank. And it's very, very easy. And of course, silver's done fantastic. It is going to rocket. And you want to get in before it rockets. I certainly want to have a lot of silver in my portfolio before silver hits 50. I'd love for by the time it hits 50 that my average price is in the 20s, which it is right now. A lot of people, their average might be in the 30s. So what? If it goes to $200 an ounce, you are going to be very, very thrilled. And of course, you're going to get the benefit of compounding. You know, Bitcoin right now trading at over 100,000. If it goes up $1,000, it's 1%. It's got to do a lot to get up that much. Silver's trading at $30. Gold's trading at 2,700. On $1,000 an ounce, 20% increase is 200. On 2,000, it's 400. On 3,000, it's 600. So the 20% increases get better and better and better till the point that, yes, it'll reach its purchasing power. You'll want to sell it. You'll say, I don't need 50% in my portfolio. I can sell off half of my positions. These are the sorts of things, great decisions that people can make. Or they turn a $400,000, $300,000 portfolio in their registered account into $1 million portfolio, and then you can move into, hopefully interest rates will have will have risen. There'll be lots of great investment opportunities where things are cheap and undervalued versus the current stock market where everything seems to be overvalued. And you could get dividends and you can get interest on your $1 million or whatever you've got at that point in the market because gold and silver have done a moonshoot. They're going to continue higher and higher. And of course, at that point, you've deferred your taxes. Is the government still going to be charging income tax on what you pull out of your RSP portfolio? Maybe, maybe not. If they are, it's a lot easier to pay those off with interest than it is to have to sell off your capital. So we hope to see that in the future, and I truly believe that you're going to see that with gold and silver. I've already seen it with lots of our clients, and I believe we're going to continue to see it over the next few years. So this is a really, really exciting time to be owning assets and actual physical assets, hold in your hand assets. And remember, if you can't hold it, you don't own it. We've got an investing seminar coming up on February 1st. Go to our website, guildhallwealth.com, and sign up. We are really running out of spots, so please do it quickly. Even call us. Make sure you secure that spot. You can hold physical gold and silver in your RSP, and that's what we're going to be talking about. If you've never done this before, start with something small, tube of silver maples, an ounce of gold, and we're happy to walk you through that process. If you've missed a show, catch us on YouTube, catch us on Rumble, Spotify, or even on the app here for AM640, which we have on our website. Go to our page for The Real Money Show. It's been a pleasure speaking with everyone. Nick, thank you for joining us, albeit briefly because I like to talk. But thank you so much for joining, and we can't wait to speak to everyone next week here on The Real Money Show on 640 Toronto.